I've been getting a lot of questions about the penalties for underpaying your estimated taxes. And so, how estimated taxes work is that if you're a business owner, you don't know how much money you're going to make throughout the year, but the IRS is just going to assume that you're going to make the same amount of money last year, or at least use that as a basis to calculate what's called a safe harbor amount. So, as long as you pay that amount during the tax year, they won't hit you with any additional penalties. However, you will have to pay the full amount of taxes due by April 15th of the following tax year. So, for example, if you make $80,000, and this is from line 11 of your 2024 tax return, and let's say your taxes were $15,000, then you should pay $37.50 every quarter, which total is going to be $15,000 throughout the year. And as long as you pay that, even if you make more money, the IRS is not going to hit you with any penalty. So you'll pay $15,000 throughout the year. Assuming you make the same amount, you'll be good. Let's just say you make double that. You make $160,000 and you owe $30,000. As long as you pay that $15,000 throughout the year and then pay the remaining $15,000 by April 15th, because you made double the amount of money, you won't get hit with any additional penalties. And these two amounts are called a safe harbor. And I usually go with the higher amount as far as the estimated payments go. But let's just say you fall short and you end up making the same amount. As long as you pay that amount, you'll be good. But most business owners start making more money each year. And so that is if you make under $150,000, the safe harbor amount is 100% of what you made in the prior year. So hopefully that makes sense. And if you don't make any payments in this scenario, you'll pay $802 in penalties. If you pay, let's just say $37.50 the first 2 quarters, and then you stop paying the third and the fourth quarter, you'll get hit with $250 underpayment penalty, and you'll still have to pay the taxes plus this penalty. And I want to demonstrate that if you pay the same amount, which is $7,500 in this scenario, but if you had waited till the third and fourth quarter to pay it, instead of paying $250 penalty, you have to pay double, about $550. And the reason is that each quarter you should have been paying it, and the interest compounds each quarter. So the interest rate has been about 7 to 8% the past year, and so those are the rates I've been using. And actually, this is from the prior year, so 7 to 8%. 1% is not a huge deal. So if you can pay it, you should want to pay it earlier rather than later. And so we can obviously mess with these numbers depending on what you actually pay. And so let's just assume that you are a taxpayer. Your business did $160,000 and your taxes were $30,000. You would have to pay 110% of what you owed last year to be in the safe harbor amount. And so that amounts to be $8,250 every quarter. And even if you double your income to $320,000 and you owe, let's just say $60,000 in taxes, as long as you make these payments of totaling $33,000, because that's the safe harbor amount, which is 110% of what you owed last year, you won't get hit with any penalties. And then the remaining roughly $30,000 in taxes, as long as you pay that by April 15th, you won't get hit with any penalties. So in this scenario, you'll get hit with $1,762 in taxes. And this is just an estimate if you don't make any estimated payments throughout the year, assuming you make 160 grand. And so if you can, you can make tax payments throughout the year. Maybe it's a little bit less. Maybe it's $5,000, and then maybe the last quarter it's a little bit less. At least you can minimize the amount of penalties that you'll have to pay throughout the year. So that's how estimated taxes work. So the IRS just expects you to pay your safe harbor amount based off what the income you made last year, and then any remaining tax that you have to pay is going to be owed by April 15th. There is some nuances here where if your income is, not consistent throughout the quarter, you can also input the exact amount of income that you made each quarter. Obviously, the quarters that you made more money, you pay more taxes, and the quarters that you didn't make as much money, you don't have to pay taxes. So that way it doesn't mess up on the calculations. And so the IRS understands that you just have to manually input the amount of income that you make each quarter if you feel that the penalties amounts is not consistent with how you made money throughout the year.